Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Thursday, December 20th. Well, we had a little bit of a reversal from a previous day. We had that large follow-through day from Wednesday and from Tuesday, excuse me, Monday and Tuesday, and then Wednesday we actually reversed course and we sold off. And that really, believe it or not, it's the markets are being held hostage to what's going on with the fiscal cliff situation. Whether Biden says something, Obama, some from the Democrats, something from the Republicans, the markets are getting pushed back and forth, and it's obviously not right. But they're acting like school kids. They can't resolve an issue that they waited so long to, and now they're trying to get something done here before Christmas, which I believe something's going to happen. I'm not really worried about it. What I am worried about is how to trade the markets when the markets are getting tossed around, and you have a position on during the day. So. That being said, we did get a little bit of a sell-off. We had, give a quick rundown of numbers, NASDAQ down 9, S&P down 10, Dow down 98. VIX, we had a nice big spike in the VIX because markets are selling off. People are starting to buy some protection against their portfolios. Rightfully so. We are at some lofty levels, guys. And I got to tell you, we had a 3-day pullback last week, very small, very minimal, no fear. Which is bullish, and we said, look for follow-through, and we did get a Monday and Tuesday. Yesterday, I thought we would probably consolidate a little bit, and we did. We're still within the candle from the previous day, so I'm going to show you that in the charts, and that's also a bullish sign. We are into some seasonal strength time of the year, so everything's pointing to the cards up. I do think in the longer term, I think 2013 is going to be a difficult year for the market. Might not be the first, January, February, the first quarter, but I do think that I do see some difficult times ahead. Not the Fed continuing to pump liquidity into the markets and driven this market up from the 666 low of the S&P. So I mean I don't see that happen. I think that they're running out of bullets. But again, we trade what we see. We trade what the momentum is. We trade the trend. The trend is up, and we're still in this bull market, and we're going to continue to trade that unless we find some relative weakness to the market and or relative strength to the market. So keep that in mind, guys. When you're trading intraday, you're trading during the day, you really can go either way. But when you're swing trading a little bit more, you want to follow what the trend's doing. So anyway, back to the markets. So we saw a big spike in the VIX, a little bit of fear. One thing that was bullish during the day, we did see the riskier sectors, Russell, NASDAQ, they held up really well yesterday. And I'll show you that in the chart in the Russell. So I'm not really looking for much for tomorrow, especially going Friday, and then of course we have a half a day for Christmas Eve on Monday. So I'm gonna briefly let's just count on some of these, talk about some of these sectors, and run through a couple of indicators here. Let's take a look at copper. And copper's forming a symmetrical triangle, and if you go to a weekly chart of copper, and you could see that it's a big, large channel. This is actually healthy for this pullback to occur back into this area of support. We have the 50 to 200, and of course we have this horizontal trend line support here. So copper pulling back from this big move is actually very healthy. And we did see a little bit of distribution back here, but nothing really much. As long as it holds above this 355 area, I think copper will get enough energy to really start breaking out here for at least for the beginning of the year. Okay, take a look at the VIX. We mentioned the VIX. Big spike up. We just got. Let's see if we get some follow through today. I would personally like to see this market come in a little bit, between today, tomorrow, even Monday or so, and then get a bump into the next week and into the new year. And then, obviously reevaluate it. But not bad. Not a bad little push up here in the VIX, but we want to see a little bit more. I'd like to see this VIX break out his Bollinger Band, break back up into here. That way we get a nice little pushback lower in the market, and then obviously we can buy into going into the end of the year. Now this Santa Claus rally so far has been very, very tricky, as you can see. It's not just we buy it in the beginning of December and forget about it. This is because of the issue of this fiscal cliff, so we haven't had much clarity on what's happening. So we have to be a little bit more nimble. Take a look at the dollar. Dollar did break that trend line, that up trend line, and now we're back to oversold. And as you can see here, our ratio chart in U.S. dollar SPY just starting to hit turn back up just ever so slightly. But let's take a look at if we get some momentum going here. We do have a lot of resistance up above. The longer term picture, which I showed you on the weekly chart, we have a head and shoulders pattern, and if you can see this on the daily too as well, head, left shoulder, right shoulder forming, and the neckline is actually right here at 78.50ish. So if we break that, I think we're going to get a nice big push in the equity markets, and then eventually at one point next year we actually sell off again. But again, that's just my my thinking. S&P with the ATR, as you can see here, we did hook up a little bit, and we do have a little bit of an inside day. I'll get into the charts with you with that, but really no change in there. And lastly, we have our NASDAQ record high percent index. We are way up above these areas here. So this is just a word of caution that, see, if I'm not a swing trader at this time anyway. I'm not swinging right now, but if I were to hold positions, I would be using caution when I see some of these indicators happen. Okay, so let's go right into the charts. 5 minutes just to show you what would happen here. We did gap up a little bit, ever so slightly. We actually held this range, is upper end of the range, and then we sold off to the end of the day, and then really sold off hard at the end of the day. So really not much momentum. If you're looking for some good plays, I really didn't find too many good plays. But if you look at what's happening here, we're still in this range. So now we're inside a range from the previous day, and I'll get into the chart now. And as you can see here, we're back in there. So we took back at least half of that, which is fine. If we could stay above this slanted neckline, I think we could get a good shot at taking a run up to the 1465 area, and at least the highs 1470, 1475, if everything gets resolved. But if we do get this resolution, it'll be interesting to see if they sell on the news. And that's something that you have to realize that it's a possibility here. Okay, but anyway, inside day from the previous day, we really didn't have too much distribution. So if you look at it, but I did read on an article that outflows in equities have been gigantic this December. So this is that's not good. You want to see inflows coming in, not outflows. So people really cashing in their dollars here. In the mutual funds, mutual fund community. Anyway, okay, so the spiders. Take a look at the spiders. We had a nice big move up in here, and we have an inside day. We're back still above the upper resistance line, so we just want to use a word of caution. We want to continue to stay up above 144. Okay, on a 60-minute chart, I don't have it with me because I just want to keep it brief today. We have we're coming into a buy signal on a 60-minute. The moving average is sitting on the 20 period on a 60-minute chart. So let's see if that holds. If that does hold today, then we might be able to at least come back up into this upper area. But again, spiders, watch the low and watch the high of yesterday's high and low for the SPY. That's going to give you a big trigger. Again, the 15-minute rule, opening range always applies. Okay, and IWMs, as you can see here, we have inside day, but really we just have a little bit of a doji in between our large engulfing candle. So a good spot, held up really well as NASDAQ did. And we'll see what happens here. This is going to be interesting today and tomorrow. And Monday, I really call it a wash day. And here's Apple. Apple did sell off a little bit. Again, we had two big up days. Nothing really to worry. Again, if you are long from down here when we talked about it for a trade, then I would say your stops are going to depend on how far you're long and how much profits you want to protect. And your risk tolerance as well. But if you are long, maybe below this candle here, or if you really want to let the trade work, you're going to have to go a couple of bucks below this engulfing candle right down here. But again, still constructive, still okay. I think for a trade, it's still a good hold. If Apple can get momentum, we can probably get back up to the 200-day moving average, which is the 575. But now, as you can see, the 200 is starting to curl down again, which I don't like. And that 50 period is way coming into there. So that could be a death cross here coming soon. And that's not what you want to see. A lot of funds, they will not buy. They'll start looking to liquidate their positions even more. All right? Guys, take it easy today. And tomorrow, the liquidity is going to dry up pretty fast. If you get in trouble or if you're losing a little bit of money, just take a step back, and then you got all of next week, and then we got again all of 2013. All right, guys, keep it tight, and we'll talk to you tomorrow. Take care.